Welcome, ladies and gentlemen. So, yeah, I never wear a vest on this channel, but where I am, it's too flipping hot. I'm not going to put myself through it. So, if there's too much hair on the chest, deal with it. So, with that being said, let's break down what we're talking about today. We've got Powell speaking, but he's speaking to a group of central bankers. And is he going to say that he's going to retire, resign, or he's going to cut the interest rates? If he's not going to say anything like that, then anything he has to say is probably going to be the same story. We've got to wait and see, data this, data that. But this week, we do have a lot of data coming into the market, which is going to dictate where investors' expectations of interest rates are likely to end up. So let's just get into it all, ladies and gentlemen, break it all down. Let's get this chest hair out of your face. So the day starts off with Powell actively having a conversation later on to a group of central bankers. It says he's due to deliver opening remarks at the Integrated Review of Capital Framework. You're suppressing capital, Mr. Jerome Powell. Get your rates cut, but he has got a point, though. Let's just stick with it. Go over to the yields themselves and have a look at where we are. Right now, you've got the 10-year bond market just pulling back from yesterday's move to the upside. The 2-year yield is up 0.26%. Then you've got the 5-year and the 30 and the 10-year and the 30-year. They're all trying to make reversals from these lows. When you see the yield market fluctuating like this, it demonstrates that investors are not consistent with their expectation or view of the future. Now, going into today, we do have just Powell speaking, and then after that, you've got the Richmond manufacturing data coming out at 3 p.m. UK time, 10 a.m. Eastern Standard. But it's what happens throughout the rest of the week. Thursday is going to be a week packed with economic data, which is what the Federal Reserve needs to establish whether or not they are going to cut the rates. Quite frankly, the economy is still doing well. This is why Trump is banging on about the idea of cutting rates. Speaking of Trump, word on the street is that Trump is going to be actively putting out more letters to other nations regarding tariffs. That's kind of got investors a little bit concerned because overnight, we've had a transition in the sense where euro's moving up, gold's moving up, yen is moving up. Now, just quickly going over to those asset classes, you can see that the dollar dominance is taking a little bit of a tumble to the downside, but I'm saying this now, do not sleep on the dollar because the dollar is going to make a very interesting recovery. Tariffs are going to be a bit of a problem, but money is going back into the dollar, especially when your stock market is so high. But going over to the euro, you can see euro is trading relatively well. On top of that, you've got gold. Now, when we speak about commodities, let me draw your attention to something. Quite an interesting move from a commodity called silver. Everyone is asking the question, are you going to be buying or are you going to be holding off? When I say buying, I'm talking about risk on. The general relationship says the following. When silver's price is going up, it usually implies that high inflation is around or substantial monetary easing. Which one do you think that we're focusing on right now? Inflation. Could this be the reason why the Federal Reserve is still not cutting the rates? Because it expects that inflation is still going to be a problem. Look at this chart. The US 5-year forward inflation expectations, which is this green line right here. If I remove all the other stuff right there, you'll see that it's green and it's starting to rise. That's a bit of a problem. If we look at silver's price, look at that. It's starting to rise. Now we've got ourselves a representation of investors who think that inflation might still be a problem in the future, which would then make sense as to why they're not buying US bonds, because they are demanding a higher yield in the future. That naturally means that the bond market will keep on going down and the yields market will keep on going up, and that equally does put pressure on the stock market. However, your stock market is currently at all-time highs. So why is it at all-time highs? Well, it's being fueled by great earnings calls from various companies. Now, we know that we've got the big daddy of earnings in the near future, which is Nvidia. But we've already had great earnings from TSML, the Taiwan semiconductor company. You've also had great earnings from ASML. They are also another semiconductor company, but their expectations of the future are looking very trimmed. They're not liking the story of tariffs, which takes me back to this story that Trump is also pursuing more of the story on tariffs, and he is yet to come out with anything with regards to the euro. We're in a little bit of a limbo with the euro. So could the market be giving us a little bit of a clue that inflation is going to be around for longer periods of time, and we might not get those rate cuts that we're looking for? Well, investors' expectations is that they don't think we're going to see the cuts anytime soon. September, there is a bit of a fluctuation between what they believe could be 4%, 4.25, and 4.25 and 4.5% on the rates. Here it is. There's the September one, and you can see, whoop, yesterday that was at 33%, ladies and gentlemen. It's just jumped up another 10% to 43.2%. That could be because silver's price is going up and investors are like, no, thank you. Now, remember, I've been waiting for this with silver and I've got a price projection of $50. If inflation is going to be around for a longer periods of time and you've got an economy that is still expanding, inflation is still going to go up. And that's where we are in that medium zone where do we go from here? Right now, we've got investors going into commodities. I mean, if you go over to oil, true commodity investors will always go to oil in times of uncertainty, but oil is so cheap, but it's other things that are impacting inflation, like the prospect of tariffs, like the idea that it's still being sticky because you've got such a strong labor market that is still fueling and keeping inflation at bay. On top of that, you've got the AI sector, which is creating this massive economic boom, demand for workers, demand for people, as much as you think they won't demand them because AI is just going to replace everyone. Not quite the same, but you still need people to make things. And that's where we are right now in the marketplace. So, cryptocurrency. We've got some more people buying Bitcoin. Singapore-based AI companies getting involved and adding to its Bitcoin stash. This is good news. So does that mean the market's going to pump? Well, the market is moving up. But listen, it's this. In front of you is a list of companies that are actively adding Bitcoin to their treasury balances. This is good news. Unfortunately, your Bitcoin's going over there. So get what you can. Forget about day trading opportunities. This is where, and as much as I begrudge saying it, this is where you say I'm in it for the tech, all right? If Bitcoin is being picked up by all these companies, then naturally other companies are going to jump onto it. Now, you've got a couple of legacy assets in there like Tesla, and you've got, of course, who else do we have? Metaplanet. You've got various companies that aren't always involved in cryptocurrency, but they're getting onto the train. They're jumping onto the gravy train, all right? 90% of these companies here are all about cryptocurrency, but they're putting it to their balance sheets. This is where your crypto's going. So just get involved in it, okay? And however long it lasts for, because remember, Bitcoin's price will fluctuate, but fundamentally, if it gets to a price point where it's just physically impossible for it to go lower because of how many people are holding onto it, there will always be buying and selling, but that's when you start getting into the realm of store of value. And it will naturally spark interest from participants to buy it when it hits a certain point, because technically, as a store of value, they would want to retain it at that point. Ask yourself why you don't really see Warren Buffett's company, Berkshire Hathaway's, the share price of that does not go down massively. It averagely trades around 300 shares per day, but each share costs nearly $750,000 to purchase. That's where store of value comes. That's where they can then control price. And then that's when it will be physically impossible for the average person to go and buy Bitcoin, because it's going to get to a price point that will be deemed absolutely astronomical. Great for the holders. It's going to be even better for these bad boys soon. Quickly heading into a little bit of price action. So we got Bitcoin trying to bounce away from this 50 EMA on the 4-hour time frame. Going over into the daily, you can see that there's been a lot of up and down and whipping, wiping and hitting of price action. And it's really throwing investors about. But as long as Bitcoin can sustain itself above the 5 and 13 EMA, which is the candlestick that we're looking for them to confirm, then the logic says that Bitcoin still has the trajectory to keep on climbing up and head into price discovery. Now, what you've got to be mindful of is this. I spoke about it yesterday. The order book is still relatively light on Bitcoin. Now, let me just draw your attention to something. To the guys that I spoke about it this morning to the Platinum members. And before I get into that, remember there is a discount code for the Platinum membership to get trade setups. And those trade setups are all based off the utility of the hybrid system. And you get those setups every single day. So you go over to the members section, Platinum membership, and you, of course, use the discount code all-time high, all caps, and you get 20% off your first month. So get involved, try it out, and see if it works for you. Now, going back into Bitcoin's price, you can see that we've got the nice breakaway from this 5 EMA, which is what we want to see. It's been trading below it, but holding above the 13. If this behavior of the candlestick is going to sustain itself, then that's going to bring Bitcoin to start testing the previous highs. Now, the stock market has already taken out an all-time high again. It did really well yesterday. And we look at the way NASDAQ's behaving. We go into the actual not order flow, but statistics on it. You can see that NASDAQ has only got 3 distribution days and 2 on the S&P. So there's not that much selling. But going into the price action of it and going have a look at the volume of the NASDAQ, you've got to remember that we've got Google declaring its earnings tomorrow. So today might be a little bit of a quiet day, but volume is there. Look, I've been saying this. If volume's not there, we've got a problem. But if we do start to see the volume coming into play, then that can solidify the idea of a bullish market that is happening right now. Remember, nothing will stop going up until the Fed decides to cut the rates, because investors don't have a reason to move money out of high risk and just start positioning themselves into other assets that they can then get a benefit from the fact that interest rates are going to be lower. They need to just do what they can right now. Once the Fed pivot comes, that's when you're going to then see the market turn. As you head into the open, you've got Coca-Cola declaring their earnings and a number of other energy companies all going to be putting out what they think the story of tariffs is going to be like for them in the future. This is what the stock market is actively looking for. What are companies' expectations of tariffs? Now, if we do get earnings calls that are showing that they're struggling with tariffs, the stock market is naturally going to react to that. And investors will then say, yep, tariffs are going to be a problem. And it's even worse with high interest rates. But then you've got the problem of the Fed thinking that tariffs are going to lead to higher inflation. So we really have to make sure that interest rates stay as they are, because we don't want to cut and then inflation goes back up again and we then have to start increasing interest rates. So you can appreciate why Powell has got a lot to contend with. If you've enjoyed today's video, mad love and respect. Make sure you like and subscribe, and I'll be tuning into you all tomorrow. Mad love and respect, gang. Peace. No more chest hair. I won't do this again. I'm sorry.